So we're basically going to do a trade review, at least just for this little video. To start off with, we started with a trade that had a potential of £66. So we're just using £20 per trade, at least in this. For the record, this is a demo trade. So basically this purple line here represents a hourly resistance line and support line, and this blue one is also the same, but the blue one is more of a current high, current low, as opposed to, so it's like a possible support and resistance line. Well, if it came to it and it then reacted, then it would then be a problem for me, basically. As we can see that we've got this piercing candle here, so this little green candle here has pierced halfway through this red candle, and then it's come back, and then we've got this candle here, but it's landed at the same spot. So basically we're getting lots of reactions around this purple line here. And then we've got this hammer here, this nice little hammer here shaped on, so there's a lot of things telling us that this is climbing up, but obviously it hasn't actually moved out of its spot for a while, right? This trade was taken up here, as you see with this blue line, where it has passed this level here. It was a bit late, so my risk was just above this line, as opposed to a safer point where it could have been under here perhaps, but obviously that would have increased my my risk amount and it wouldn't have had as good returns, I suppose. So it's just above this support line here, where you've got point here, point here, point here, basically. So that's the start of the trade. And then we've drawn in lines above. So we've got a current high here, which could have posed a problem. And then we've got this blue line here, which was the original target, which also would have posed a problem because it's quite a large one. It's on the hourly, so it's a higher time frame. So it's something we don't really want to be in for too long. At the same time, the charts were looking a bit where we've got these move and averages down here. And normally when we have price coming down, we usually have a correction and then it proceeds to go further down. But there was an issue because here, this little black line that's going across, as you can see, even here on the 8 hourly, was actually a monthly support line. And when we hit one of these points, usually price has some sort of reaction. Doesn't necessarily tell what kind of reaction it could be, but it could move sideways, up, down, anywhere really. It could just halt for ages, for example. So it's obviously bounced off of this area, it's come up and it's come down, but then now we've got this bullish candle here, and now we're getting some sort of like reaction around this area. So we've taken a trade up here, and we don't really want to be on it past this point just because this is in the way, okay? So price basically reaches this point, which is this falling resistance line, which was on the hourly, and then we've got this long-legged doji. So I don't really, personally, seeing a long-legged doji and hitting a resistance line, I don't, if it comes any lower than that, I can't tell how far that correction's going to be. So personally, I don't want to be in it. I've noticed a lot when things hit these points, we get too much of a correction or too much of a reaction that I might as well have just took some profit and then trade once the correction has happened. So I've placed my stop there. That's my risk management, 33 quid, and then that would, well, actually that ended up hitting that, but I said wait. So this is the same point from here to here, right? So it's obviously touched, yeah, it's touched this point, and I'm like, okay, I'm coming out. And that's, well, that was that trade. Then the next one, as you can see, this is long-legged doji. We've come out of that trade, that point there where that red flag is, and we've taken another trade after this hammer. So we've got this, basically this bullish candle here that could have been piercing candle, but it wasn't. And we see if it hasn't closed more than halfway, you don't really want to be taking a trade off of that candle, because it's just sort of like, it's one of those, it's like a warning. It's better as a warning, and then the next, if it closed a little bit higher, then it's better. But if it's like halfway, oh, that's what it's called, it's a thrusting pattern. So we got basically a thrusting pattern, and then after that we got a hammer. Hammers don't need confirmation. They're like undisputed, so we just literally take the trade. We've got like a thrusting pound with a hammer. I think that's good enough to basically take a bullish trade in that direction. There's nothing in the way of this trade. Essentially, we might as well just plonk it all the way out the top. That's quite a good return. I mean, I don't really know how much that is. That is like, what? Is an 8.2 to 1. So what would justify such a move? This point, this point, this point here, this little red candle, this area here is basically tapped it. That's it. Where's the monthly? It's better to see it on monthly. There we go. So we've got this point here, this point here, this point here, and then that same candle, that red candle here. What hadn't touched this bar yet, but it basically, it's already poked. It's poked at this black line. So instantly we've got a reaction. It's gonna feed up. And on the hourly, alright. So what we're essentially looking at is the fact that the monthly was here, and as you can see, like, it's important to note the type of candle that basically hit that line. Like, this is a giant bullish engulfing candle. It's engulfing that tiny little candle here, and then on top of that, right before that, this green line here, which is also on the hourly, which is exactly that area where we've taken that trade, that we've taken that hourly trade and, well, we've taken that 2-minute trade, right, and we've come out right on this red line here, right? But obviously it's still relevant. Obviously we're waiting for a correction, so we got the correction, we took that trade again, and then we targeted this area here, essentially this area here. And yeah, we could come out and then trade the correction again, but it's more the concept of, okay, so this is in the way, this line here, tap, then we've got tap here, then we've got tap here, and so each line is a problem. So we can't tell how far it's going to correct. So we just want to come out and then see what happens. We want to watch it and then retrade it. And what happened on that day was essentially just that. We had this large correction. There it is. So it's touched this purple line, as you can see. We've come out here, apparently. So we've taken the trade all the way down here, right? And then we've come out around this area, and then we don't know how it's going to react, right? Obviously, we said before, like, it could literally drizzle around in at like this little box range, or it can go up still, go straight away, or go down, but we don't know. So that's why, like, once we come to this point, this little reaction point, we just come out, right? We watch what happens. Okay, it came up a little further. Could have squeezed a bit more out of it, and that would have been fine. But we don't know. So we wait, and as we waited, it came all the way out, and it came down, came below it, right? Until candles got smaller. They got a little bit bigger around this area, got smaller again, smaller. But none of these things are actually, like, none of these candles are really telling me anything. They're not really telling me anything other than the fact that it's slowly decreasing in power as it goes down. So that's the correction after it hitting its target. And then candle gets a little bit larger, right? And then we've got this large bullish candle that closes above the line, right? Now there's more power coming into the market. We've got this little crossover down here. So to be honest, even on just that alone, we've got a shaved head and shaved bottom. That's basically a belt hold. You might as well just trade that candle alone. You could trade it and then go to the next resistance line, which is basically here, this next bit. Then we've got another reaction around this area, and then it's basically the same concept. But yeah, but by that point you don't really want to be trading because it's past like 5 o'clock and it's like currency, so it's just a little bit dead. These resistance lines, it's important to note what precisely was on those lines. We took the trade around this area. Like, there's nothing particularly special behind what this looks like. We've got a declining resistance line, which is basically a TD point, and then there's nothing real. There's no real big signal there that's telling you anything. But when you look on the line prior to that, you do see prior signals like this bullish engulfing hitting the monthly line behind that. That was the reaction behind this. This whole leg here was a reaction, and then this giant leg here is the correction, and then this is the other move. So there's like, it's larger things creating, if you're just literally looking from this aspect, right, it's touched this green line here, which was previous on this bullish engulfing. So this bullish engulfing, right, is what we're currently seeing from that reaction. So it's come back, it's touched it, right, and now we're getting a reaction from that point. But that's a smaller aspect of something bigger that has happened. As for target, you're just literally going to the next one, going to the next one, going to the next one. Even looking at this weekly, it's like, it's still below the 200, the weekly's below the 200 EMA. We've got this evening star or morning star, I can't remember which one it is, and then, which is usually a bearish signal, but obviously with large candles, price has the tendency to go halfway up a really large candle. So they always say like the 50% mark of that large candle. So this large candle in front here, right, price could literally have been going halfway, and it literally has. It's gone halfway and it's come back down. So, and it's hit this line here, which I can't remember what color gray is. I think gray is, I think gray is weekly. Gray is weekly. Gray is weekly. This is the weekly line. So is there weekly touches? Yeah, okay, look, like, got touch, touch, touch. And that just happens to be just above halfway of that candle, and we've got a reaction from it. So to be honest, it's always about the next target and just basically watching carefully as to where it's going and seeing the next step it could progress to, rather than going, okay, it could progress to this target that is like half a mile away, but before it reaches it, it's going to do a lot of bouncing around. So it'll bounce back every now and again, bounce back every now and again. But the point is, you just want to be in the trade to the point, and you can trade the corrections. You can definitely trade the corrections, but to be honest, I just think that's just unnecessary stress.